Hello, Warriors. We have a hullabaloo of central bank meetings and decisions this week. So, thinking about that, I'm looking for trading opportunities in euro and cable. But we have the Fed Wednesday, and then we have the ECB and BOE the following day. So, why not trade something where the interest rate decision from their central bank is already done in the cake? And I have a few ideas, and it's mainly in the commodity currencies here, because you guys know I was bearish a crude market last week. And Friday, if you were in our main chat, I'll show you where the recommendation went out. But, looking at the Dixie, we still need 102. To me, it's a coin toss, and that's why it's a coin toss in euro and cable right now. Are we going to flush one more time, get that big round number under par? Over 102 will change the picture. I'm not going to get flip a coin for either narrative. I'm going to let it show its hand to me. But I was thinking about things like Aussie. So Aussie is coming off because we have a little risk off happening in the S&Ps, but it's already bouncing back. But you have something like copper that's rolling over. And then with my view on what's happening in WTI, and we're following through to the downside, this is really the line in the sand for the bulls. We start closing under 78, 77. I think we're going to new lows. Here's a daily on it, and tell me if you're impressed. There's a daily. Look at the weekly and tell me if you're impressed with this recovery. And this was something that talked about for a reflex rally off the test of the breakout. But this action over the last several weeks has really put in just can't close over 82.5. And that's what it's going to take to get continuation up to 90. And now we're sitting here right at the 77 level, and we start taking that out. Why can't we see new lows in crude? So that makes me think of Canada, just like, if we had risk off in a combination with a sell off in WTI, and I'm not saying today's the day, but we are approaching some 200-day moving averages, maybe another 140 pips lower. See if that can happen. But I have the most conviction about what's happening in crude. And then second on the list is we're threatening a breakout on 10-year yields, which is something I talked about last week. We're still attempting it, closing, tried to get above it Friday on the number, then we opened above it, and, it's trying to negate it again. But to me, I think that the surprise from the Fed could be, since the market's seeing other countries pause, Canada the first to tighten, so you have to pay attention, and the first to pause. Okay, they're not lowering rates, but they're pausing. So the market has expectations that because you're hearing that kind of talk about, this is it for a while, that the Fed may follow suit. And what if the Fed isn't really happy about the market not caving? And we'll see what happens. We have NFP Friday. I mean, it's really a week full of red events. It's almost the kind of week that you can take off, because you're going to have some binary outcomes, at least for a while after these things are in the market. I don't think anything's priced in the market right now, certainly not the Fed going 50. So we'll see about that, but a lot of conviction about the short side of crude. Pretty good conviction that yields are going to start heading up. So here's your 10-year. Here's TLT. It's up a little bit today, but we still are putting in a lower high in TLT. So we'll see. It still is possible before we blow to new highs over 110 on this recovery that we could get something similar to this that could take it maybe back down to 98 and take the 10-year yield up to 390. and we'll see if the dollar differential talk that everyone's really trading, and it's been working, is being long euro because of their more hawkish stance. We'll see. This really hasn't done anything. If you've been trading them, um, going back to the beginning of the month, we've basically been in a 100 pip range. Uh, we had a better correction in cable, but here we are again in another 100 point range, 24 to 23 in here. And, we can make another new high and fail. So the reaction after the BOE is something I'll be paying attention to as well. And the yen, which is something I want to follow up on, goes with the higher yield story. So there is a pretty good technical comparison between the 10-year chart and the correlation. So if we're going to start heading higher, and maybe yields have to make another trip down here, to me it looks like they're trying to turn. So if that's the case, we're going to have a pretty nice rally in the yen that could take us all the way back up to 34, just based upon this being an ascending triangle with a flat top, breaks out a shade over 131, and the low here was 127. So you tack that on, and you're up to 135. And if you look left, that's where we were in January, the beginning of the month, before everything took off. So this still is a reversal formation, but you need a breakout to confirm it. And S&Ps, I know a lot of people are talking about looking for highs here. I still don't see anything yet to convince me. This is, once we started breaking out, my alternate scenario was that we would try this line, which was a uptrend line that got broken, that got tagged here in January, and later in the month it's coming in around 42 and a half to 43 next month. Over the next, each of these candles are weeklies. So perhaps what we do, and this was always an option, is that we rally back to where we were in August, maybe take out the stops, turn everyone bearish. And that's why I'm looking at the VIX. It gapped higher today, but I think that we're within weeks of a significant low in the VIX. Some people's work, who I respect, believe that if we get that flush out, one more flush out, that this time the VIX will perform, and that 48 is a potential target. And we haven't been there a lot. We kept every round of vol during 2022 stalled at the 35 level. So a breakout over 35 can give you 48 to 50. That, I think that can happen this year. The time, is it the first quarter? Is it second quarter? Do we do it, peak here in February, or can we stretch it out till sell in May and go away? That's the question. But all we have to do is just follow the chart on the S&P and see where that speed line gets tagged, and that would be a time I'd go out to June. And I've been interviewing some people who are saying that VIX calls right now are very cheap. The DSI on VIX was 10 last week. So if people thought it was broken all through 2022, they now are saying it's obsolete. So let's see. Here's the sentiment now in the market. It's a waste of money to hedge. Okay. So remember that it's a waste of money to have homeowners insurance until there's a fire. So that's what I see ahead for the market. Not a lot of conviction in Dixie till we start closing back over 102. I concentrate on CAD and Aussie for reversals, looking to be long CAD, looking to be short Aussie, based on maybe some commodity weakness, copper. Maybe we'll get a negative story out of China. That could have an effect on Aussie as well. Just look at the Aussie chart. There's your weekly. It's going to take this week closes under 69.85. So pay attention to this off number, because if we do sell off, 69.85 would be a great cover from wherever you sell it, about 100 pips. And then look at this confluence of moving averages around 68.20. We did not confirm the new high on the daily. See what's happening on the 4-hour. We have some divergence here, and even if it made another push up to 71.5 with the RSI reading down here at 45, I don't believe even new highs will confirm it. We'll have another mode divergence from the real simple implicator. So Mike will be with you today. And if you are having trouble with your trading psychology, I want you to check out our guest on Thursday. He's written a book, The Divergent Trader, and how we sabotage our own hard work. And it's better than knowing about a trade, because it's about adjusting what's in your head to use your skills, because your subconscious mind is your default position, and it takes repetition and time to change a paradigm. So get going on that and join us here Thursday. Stay tuned for Mike in about, I believe, 50 minutes, see what he's doing. Probably bought a break. I know him. And, the S&Ps were down about 37 handles, now only down about 8. So the S&Ps are still acting like the beach ball you push underwater, and you can't keep it down. When you let go, it pops out of the water and hits you in the face. So be selectively short if you want to be short at all, or just wait for this line to be tagged up here around 4,300. I'll need to extend it out a little bit, but you got the picture here, and we'll see. Maybe that's what it's going to take. We had a real negative bias in the market. I even got swept away in it, right? I was looking for breakdowns and one more flush down into, say, 34.5. And what happens if we just take out, all the bears are gone over 4,300? I'm sure they're capitulating now with this downtrend line that's been, everyone's been paying attention to throughout the galaxy. Okay, not just on financial Twitter, but throughout the galaxy. Even extraterrestrials bought the breakout here. So above everything, guys, don't just count your pips, count your blessings. Thank you for your support here. Glad we're adding value to what you're trying to accomplish. The way to say thank you to us is to consider having TradeView Markets, our sponsor, as one of your brokers. I know it's not against the law to have more than one account. So good hunting the rest of the day.